Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market in the second video as usual. So market yesterday has shown the reaction on the levels that we have specified. So if you remember, we talked on major OP target on the intraday chart. That was also some signs of the Russian rinse, and we said, well, this market strongly overbought, it could show some pullback, but here we need to keep an eye on how this pullback will happen. So if we will get the straight downward action, this will be one story. If market will show just minor pullback and consolidating around the previous top, this will be quite different story. Unfortunately, or maybe fortunately, yesterday market wasn't able to show the same reaction in the stock market. So if you remember, if you have seen what is going on in the stock market, yesterday the stock market has opened with a strong gap down, and so it was really collapsed yesterday on the stock markets. While on the gold, it's mostly, well, it was no significant reaction, so market has opened around the previous top and starts dropping. And currently the short-term setup that we have discussed already mostly is completed, and now we need just be patient and see what will happen in the major support area on intraday charts. If market will break this area, well, in this case we indeed could get some deeper moderate retracement on the gold. If it will keep coiling around the same previous top, that will be the clear sign that market's building an energy for upward continuation. So in the current circumstances, it seems that the second is more probable than the first, but now market is totally depends on the external factors, headlines, and something of that sort. So it now is driving not by the own factors. That's why we need to take into consideration every scenario that could happen. So for example, take a look on the 4-time frame chart. Here's the first stage, as we said, is completed perfectly. We have estimated a couple of grabbers on Friday and said that first market has to hit the OP before the possible reaction will happen. That indeed has happened very accurately. As you can see, the OP is hit, market shows the drop. Now it is forming kind of the A, B, C, top, D pattern, but mostly its OP has not been reached yet, but well, market very close then to the target. And short-term reaction mostly is done. To get next stage of this reaction, market has to break more to the downside. And that is what we particularly will be watching for. If you have the bullish view and you would like to take the long position, you could consider this level. So take a look on the hourly chart. Market is forming A, B, C, D. Here is actually kind of the hand and shoulders pattern has been formed, and you can see that was non-farm pair Roswells, whereas our grabber was market showing the upward action. Now it's dropping lower. That's OP 1640 area. Stands right here. This OP stands in a wide range, this conference support 1635, 1649, and also this is natural support resistance cluster. So that's rather strong area. If market is really bullish, it probably will show the pullback here, but it's relatively safe trying to take the position around the OP, but not forget to move stops to the break even at the first stability. As soon as market will show some minor pullback here, move stops to the break even, because market is coming through from the strong overbought. We do not know what's real reaction will happen. Besides, if you remember, as we have estimated in our weekly report, there's some tricky moment with the speculative positions. We see that gold is moving higher, but overall net long position has decreased, and longs positions, more longs than shorts positions have been closed. Open interest is dropping. So it means that total net position on the gold market is contracting gradually. That suggests that theoretically retracement could be deeper. And as we are coming to the strong support, well, at the first stage it's relatively safe to take the position, but as I said, control your risk, move stops to break even immediately as it will be possible. If you have the bearish view, for you it will be better to see stronger bearish sign, because currently, as you can see, its overall situation is a bit choppy. It's price action. If you have missed opportunity to go short with the hand and shoulders, it will be better to wait the breakout of the conference support. If market will break it down, start dropping lower, that will be a clear sign that we're going probably right back to the lows, because major support on the weekly chart stands 40 area approximately. That will be next destination point if market will pass through it. So more bearish signs should appear on the market, breaking for this consolidation, dropping in the relatively free space. Well, this will be confirmation of this sentiment in the market. Currently, well, as hand shoulders mostly is completed, it's a bit risky trying to take the short position immediately because it's not very good situation from the risk-reward point of view. So that's what we have on the gold.